Okay, good evening, guys. Welcome to another live trading clinic. Tonight we're going to focus on the FOMC minutes. So not so much really, I guess, about interest rates today, all about the end of quantitative easing. So we'll go through the presentation. I'll go through just kind of some of the ideas of what we're expecting from the minutes and what the effect of the markets can be. A couple of kind of things coming over the news wires. Apparently, a Russian jet has been escorted to Stansted by UK fighter pilots. So always things going on. Again, depends where you get your information from. It all has to be quantifiable, but again, all these things can have a ripple through the market. So we should always make sure that we've got some good quality sources of information. But anyway, before I start, the risk warning. Remember that spread betting and CFD trading carry high risk or capital can result in losses that exceed your initial deposit. It may be suitable for everyone, so please ensure you fully understand the risks involved. The information and comments provided here under no circumstances are considered or an offer solicitation to invest. Nothing here should constitute investment advice. The information provided is accurate. The data is produced. Again, educational only. Content of the webinar is posted by the moderation on trade.com. The content is not constitute financial investment or tax advice. The trade.com will not accept any liability for the content and comments made during the session. So, again, as always, going to go through some live charting analysis. Got the charts on the hourly time frame in the minute, just so we can see the bigger levels. Multiple time frame trading. Again, we can go through the highs to the lows. Always important to get an idea where a market can move on the monthly, weekly, daily, kind of major point of support and resistance, and filter that through to your smaller time frames. That again is my all-time frame trading methodology. And then we've got the fundamental analysis. So what we're expecting today from the FOMC minutes. What's going to be said, what's going to affect the market, what's weak, what's strong. All these things again, that are building up that sentiment that controls the markets. Now, my real basic rule of thumb is the markets move 80% of the time in a technical manner, 20% of the time due to fundamental data. However, all that fundamental data will move in a technical manner. It will have to adhere to support, resistance, and to where value is. So all these things again are part of the bigger picture. I've taught so many different traders and been around traders for so long that you get to understand that people truly look at the markets in different ways. People can certainly class themselves as a purely technical trader and fade out all fundamental. I would say if you're a day trader and you continually do that over a long enough period of time, you're going to get caught out on a big directional move and lose lots of money. I guess if you trade a multiple basket of products and you trade more technically and fade out the fundamentals, sure. But if you're an individual day trader trading the markets while they're open and do not take any account of fundamental information, mark my words, at some point you're going to take out such a hefty loss that it might really affect your trading career. Got my account open, so anything that I see of interest, I'll be focusing on the euro, dollar, gold, and the S&P 500. And again, your questions, guys, as always. We've got people in the room. Ask me any questions you want about technicals, fundamentals. Got 12 minutes before we hear from the Fed, so anything you do want to hear and go through, again, please ask me now, and we can get ready for the announcement on the hour. So right now, the euro, dollar, we've seen a bit of a bounce. So we've got, obviously, oil is tanking. We've got quantitative easing coming to an end that might have an effect on the dollar, pre this announcement. But we've seen, the market kind of move down and then correct. We've seen this nice uptrend channel. Still think, at 127, we're a little bit high still. Again, if you want to talk about the higher time frame trading, all you have to do is look at the monthly chart. You go lower high, lower high, lower high. The market's clearly in a downtrend. My views on the euro are completely known to everybody. I think in the next 2 or 3 years, maybe sooner, the euro is going to split into north and south. Euro is not working, and again, it's only going to take one major upset, maybe from Greece or Italy, and the euro is pretty much finished. So no matter how you draw it kind of technically, it's looking bearish. Okay, so obviously we've seen 3 selling months and we're consolidating towards the lower end. But really, I would say once we break 125, the euro is going to be happier round about, probably 116. Okay, and then once we break that, we've got this big area where the up move started for the market to get back. Again, if you just looked at this as a blank chart, you can just start to, chart it very, very easily. Up move starts here. So where's your 50% here? We close below that, 61.8. That kind of ties in with our thinking, 1114, 1115, then below that really getting back down into these previous lows. So as you start to look on the different time frames, the weekly looks a little bit stronger than the monthlies, but we're still seeing every time we hit the highs, markets selling off. So when we get down to the dailies, we see this very nice downtrend. It's just a down trend channel, nothing too complicated at all. You don't have to be overcomplicated with your charts. All you have to do is be able to draw a line of, nice, that fits nice and looks nice. It's not overly complicated. And again, I mean, all these things are just back to basic charting. I mean, yeah, it looks a little bit messy, I guess, on the dailies, but realistically, we could start from the highs to lows here. No, this down move here is really kind of, messed up the kind of technical view on the dailies. You'd have to really try and find if you can find something weekly. And again, the fibs from the monthly just really look the best, to be honest. If you look on the dailies, that what we're looking for is that rejection of the 38.2, getting down to this 50%. And once we close below that 50%, these lower levels would certainly come into play. So the trend is down, and again, the monthly shows it's more obviously than really the kind of smaller weekly and daily charts. But realistically, the market is looking pretty bearish. So down to the hourly charts. Let's just put hourly template on. And we can see again this kind of intraday scenario where we've kind of been buying up, making these higher highs on the hourly, but really seem to have peaked out now. So really, again, we're looking for this hourly Fibonacci formula to kind of step into play. So we're closed below really 1.27547. Then we've got all these nice Fibonacci retracements. Bollinger Bands on the hourly is very close together, ready for a break. We've seen a bit of rejection, although we've been moving higher. Every time, we've got to the top of the Bollinger Bands, come back to the moving average. So a breakthrough here, again, in the next kind of few hours, depending on the FOMC, we could see, 127 broken, and could get down probably, as low as 126, 126.240. So the euro dollar, again, depends on what's said from the FOMC minutes. We're putting our fundamental 20% now into play. All these technical levels, again, are where the market can move. So it's best to have them on an hourly probably time frame with your higher time frame points of attraction, because we don't know what's going to be said. In this market, the euro dollar we've seen spike, up 100, 130 ticks in a straight line. So these are our upper and lower boundaries. So we know that if something big is said from the FOMC, then we're going to see something, some big levels reacted. Gold, naturally a safe haven. So again, it all depends on the what the market thinks and the dollar price right now. Again, inflationary worries. I mean, the basic message is that the Fed are expected to conclude the third quantitative easing cycle now, and a few policymakers have come out and said the economy is not strong enough. We've seen poor retail data and retail sales, but the job growth has been pretty consistent. So that really means that that's what the Fed's been basing most of its decisions on. So inflation, deflation. Again, these are only things you can start to control when you move on interest rates. And that's not going to be until next year for the US, probably late on. So what they're going to have to do is let the market get back to normalisation, function under normal market conditions, and not have this money pumped into the economy to keep it afloat. So, I mean, all this is going to have ramifications. Nobody knows. Doesn't matter who's in this room today. You have Ben Bernanke himself sat there. He would be able to tell you exactly what's going to happen after QE stops. Okay, lots and lots of money, billions of dollars being pumped into the economy, being pumped into the banks, and meant to stimulate this growth and keep everything ticking along. So when it finally, is taking out of the markets, what is going to happen? I mean, gold's an interesting one. I mean, you'd say that if there's any uncertainty, gold would back to these higher levels, but again, on the hourly Fibonacci's, we're really kind of moving lower. So, 250, is a good pivotal point, 1252. We've got nowhere near that. So the market must be taking this news or the anticipation of this Fed announcement today to be fairly dovish overall, that the market will be able to sustain itself and we're not all clambering in to get into gold and pushing it higher because it's a safe haven. Go back to the higher time frame, point of view. Again, all you have to look at is the Fibonacci. So we start the up move here, get to the highs here. Where's that 50%? Well, there's a rejection. So it doesn't take a rocket scientist to know when we break these lows here at 11739, gold's going to get tanked. It's going to get absolutely destroyed. Now, I've been published in the FT saying that gold will get to $1,000 by 2015. Don't know if we'll quite do that. But nothing really tests the market like panic selling. So everybody, again, that's been long trying to, buy this upturn in gold and expect it to bounce off key technical levels, they're not there. I mean, gold fundamentally just doesn't have the buyers. The hedge funds are out, the speculators are out, so it's back to normal market conditions. And again, we break these lows technically, then the market is going to overextend and try and fill this void. So $1,000 certainly has to be, a nice target for the for gold to look to test. So if it does break through these lows here, then you could easily see, a nice big, 170, 180 tick, couple of months or extended periods of selling. And then people say that can't happen, but look at the S&P. Okay, so go back to the hourly charts. Let's put that on there. The S&P. Again, go back to the monthlies. Everyone's saying, oh, no, market's going to crash, it's finished. Yeah, but look, here we go, one selling month, and we've retraced all them losses. I mean, the FTSE's really lagging on this for me, because again, I thought the FTSE had rebounded and really trying to aggressively hit 7,000 before this, but it hasn't. But you look at the weeklies, again, a couple of selling, close outside the Bollinger Band, but then there's all the dip buyers. The markets, the indices are too strong. They're not going to majorly correct this year. It's going to be this time next year, because again, quantitative easing is only just ending. People don't know where to put their money. Rich investors are putting their money in large stocks because, you've got more safety in buying Apple, Google, Amazon than you do put it in government debt. So as interest rates are going to be on the cards and go up a little bit higher, that may weigh on the stocks. But in the meantime, the stock market is going up. So a couple of down weeks doesn't end a 4-year bull rally. So buying dips, if you look on the day, I've said to you, buy dips when you see these wicks retrace a significant amount of the body. 1, 2, 3, 4, 5, 6. 6 times you could do that, make yourself about 1,000 ticks. I've been saying this stuff for so long, it bores me, okay? But if you keep doing the things right, again, any kind of dip, this market was never going to correct right now. And I've, again, been in many publications saying these things. So you have to, again, just take it on board and take what you can from it. The market is saying every time we correct and go lower, essentially, we're just finding better value. So the markets aren't selling off because of fear. They're selling off because of greed. This is large institutional grade, profiteering. People taking profit at the top of the range. So they're happy to buy lower down and push the market back up. I have quite a few select H&I clients that, I help trade. And again, I also know how I know how billionaires invest. I just know a lot of stuff. I know a lot of people. So I know what the big players are doing. These aren't retail moves. These are institutional moves. So don't start panicking the markets have crashed just yet. This isn't going to happen just yet. So back to the hourly charts. A couple of questions coming through. Can we look at the DAX S&P? We've just gone through the S&P, Boris, but I'll do the DAX quickly. I know people are a big fan of the DAX. So again, on the monthly chart, we haven't quite recovered just as much in S&P as in we haven't turned green. But every time we see the same scenario, significant close of a monthly candle, that hasn't got towards the lows and it's retraced into that body every time we're moving higher. So you couldn't really do that, as an intraday trader, or you'd have to be a longer term trader to take advantage of that. But on the days, again, every time we hit the lows, market then the next day rebounds. Close, rebound, close, rebound, close. All right, we sell off here, but then the next day we open up and rebound. So what you're looking for is that daily pattern on your hourlies. So you just take it through the charts, and every time you hit these low points in the market, just continue to look for the Bollinger Bands. Buy, moving average, go up. Bollinger Band rejection, moving average, make a new high. Rejection, Bollinger Band, close above the moving average, make a new high. You seeing a pattern here? Yeah? Low point, daily, weekly, point of support, close inside the Bollinger Band, hold above it, bang, make a new high. So every time, we're looking for that scenario in the days, we're just looking for that to look on the more manageable time frames of the hourlies and then get involved. So the DAX, although hasn't, kind of rebounded as strongly as the S&P, it's still... It's bounced off 10,000, the highs, which is fine, but it's still, looking fairly strong. And I'd say on the weeklies, again, all you have to do is look at the Bollinger Bands, how they behave. We're getting back to the moving average is the next point. This level up here, 6,595. And if we close above that, nobody would bet against it going to 10,000. So you're trying to preempt what can happen before it happens. Okay, guys, so again, we've seen a bit of a sell-off now in the euro dollar. So again, that might be some kind of anticipation before what the Fed say just now. So it's just under a minute now, guys. You have to listen out. So we're not looking for an interest rate move. That's not going to happen. We're not looking for anything major. We're just looking for reaction to any comments that come out regarding quantitative easing. Just 10 seconds then, guys. Okay, watch gold. So we finished the quantitative easing. So if the market's going to take that as good news, then we should see a little bit of a rally in the S&P and gold continues to sell down. Bit of movement in gold, but nothing. I mean, we've kind of bottomed out in the euro dollar. So no movement just yet, but we're patient. So inflation's still, below 2%. So we're going to maintain accommodative additions. Okay, so that means again, could see a down move in gold because that's good news, and we should see the S&P go up slightly. So look for these low levels to be hit. There's nothing in gold actually, so I'll just small. Let's just do a quick Fibonacci. Okay. So Fibonacci levels in gold, again, it just seems to be good. Watch euro now. Euro spiking down. Substantial improvement in the labour market. More good news coming out. Watch for the S&P. Again, it's pushing against this good news, but gold's coming down and the euro's losing ground. So I would say euro, look for low levels to be hit at 1.26424. Okay, gold's trying to get down to this 1.216 level, but not really kind of making much effort at all, really. So generally seems to be good news coming out of the back of this Fed. So again, watch these low levels in the euro dollar. Gold again. I'll be buying a dip on 121665, just a short-term blip maybe. Next level below that would be 120960. So again, I'm on very bearish gold, but it doesn't mean we can't buy dips. We're looking for value here. So again, need a bit more down movement, 35 ticks or so movement before I start buying in a euro dollar at that low rate. Again, we've got this nice level below it, 1.26255, where we could have a nice average point. Again, any low points, significant low points in the stocks to be buying. Again, I don't think we've seen a low just yet. So euro's looking a little bit weak. So again, good news coming out of the US here. It seems that the US have said that we can, go under our own steam. Job data is good. We're going to keep the interest rates accommodative. Inflation, although a worry, is kind of under control. So again, look, so good news. So gold's trying to get down to this 1.21665 level. Okay, so could be a particular bounce point. I'm not quite sure. I'll have to see how the market reacts on that point. I might not buy gold just on that point, but it will be a significant break or bounce point. Okay, so we're 1.21665. See how the market behaves at that Fibonacci 161 spot 8 expansion level. So again, good news. Gold's in a bearish market. So again, you don't want to be catching pianos and picking these bottoms. But again, you're looking for key points in the market where it might stall and get a bit of quick profit taking. So I wouldn't mind the S&P moving down a little bit lower because, again, the further gold moves down, the more likely we are to see a bounce in the S&P. And the euro, again, as I said, it's quite uncommon to see these euro at the minute, see these big extended candles. 55 ticks. We can easily get 83 ticks down to this lower level, is 1.26426, and that'd be a buying level for me. I'd be happy to buy here and here in the euro dollar to try and buy a quick snap back. So generally good news, which is weighing on the euro dollar, the S&P and gold. So this is not how markets correlate, So again, naturally the S&P I think is being pushed down just to get any short-term buys of the market out. Watch for any kind of, again, these quick springbacks in gold. Gold can be very unpredictable. We're on the hourly chart, so again, we're only 3 minutes into this, so maybe I'll zoom out to the 15-minute charts. But right now, we'll just let the first kind of 5 minute of action happen and see if we make some new lows in gold and any new lows in the euro dollar, because these are both buys. These low points, I would say, but difficult. It's difficult to sell gold. Really, it kind of stalled and hesitated on the back of that good news. But that's the 80% filter. Well, the 20% filtering through to the market, and the 80%. Technical levels being hunted for off the back of what has been said. And not great that these have been said. The market was pretty much priced in already that the quantitative easing was going to end today. This has been known not for days, but for weeks and months. So it's not new news, but it's confirmation. The market likes confirmation. So it's said that quantitative easing is finished as planned. So it is essentially good news because it's done as the market anticipated. But realistically now, that quantitative easing is out the markets. So if the markets were to say that they're not protected, quantitative easing is gone, it's not coming back for the foreseeable future, then potentially, we could see a continued sell-off in the S&P just to kind of push out, any kind of short-term traders just kind of anticipating that we're going to see a bounce further and maybe get to 2,000. that key technical level and fundamental level in the S&P, based upon what everyone knew, the quantitative easing being wound down today is essentially a good thing. So again, it's very difficult to interpret all this live fundamental data real time, and it's all about getting that short-term move. Again, if you're not involved now, then you've got to be a bit patient. Everyone knows the information now. Everyone knows that the Fed has, not moved on kind of rates as such, and hasn't, wavered from its policy of taking out, the quantitative easing. So everyone's on a level playing field now. So the initial trend was, the S&P stalled, but now it's hitting these lower levels. We've got nice lower levels to, predict a bounce point. 1970.55, 1967.80. These are good levels of support. We're outside the hourly Bollinger Bands, so realistically, in good news, we should be looking for a bounce trade on the S&P and gold again. Although it just bounced back up with some quick profit taking. Again, if we break 121665, we've got our 1209 target down. So I wouldn't be buying gold now, because if it's going to bounce, it would come back up a bit higher. So I'm looking for this to break now. So this would be a break point down to 109. Again, euro dollar in this big, extended candle. I would say these two are buying points. There's only so far it can go. So I'd be happier buying the euro down here than I would be buying gold. So I'd let gold break, and if it did reject, then probably buy it back at that level and let it go back up. S&P, again, probably 1970, 167. Let's see how it reacts to these lower levels. So really, we're looking for a bit more weakness in the euro. The euro, for me, is the one that could be potentially, the nicest move down. So we're at these lower levels now in the S&P. So see how they react. Again, these are break or bounce levels. It will tell us, the market's not finished, moving lower. We should see a small bounce off this, but we're not just yet. So 1970.55 will be the next low point. So gold's kind of just tanking it. Everything's kind of moving in opposite land at the minute. Okay, so again, on that fairly dovish news, I would say, even though quantitative easing now is out, it means that the Fed are confident the U.S. economy can be self-supporting. We're going back to normalisation. That has to be a good thing. But then stocks are just taking that as no free money, so we're just seeing a bit of a short-term sell-off. Gold's really holding towards the lows, not doing a great deal just yet. So it broke through this lower level now. So 1970.55 will be the next target point in the S&P. Again, it seems to be the market's moving in unison. So, the euro dollar is tracking the S&P. It's difficult to say what's leading, in this point. I mean, the euro dollar, as I've explained, is a little bit more negative. But again, even though I know the market could get down to these points, there's not enough value now to sell it down. We're looking, more value in buying these low points and then that quick reaction back. So again, this is a good level because we've got a safety level not too far away where we can average in and try and average out if we do see any kind of big spike down. So getting towards the lower level in gold. Gold's not finished selling off just yet. And let's see how we react at 1216.65. If it breaks that, again, we have got a good, nice, solid Fibonacci pattern to get down. And again, these are hourly, so we can see the hourly candles. It can easily move, big directions when it wants to. So holding towards lows in the S&P, holding towards lows in gold, holding towards yours in euro dollar. So something at some point is going to have to bounce. Okay, so that's the trade we're looking for. S&P getting down to 1970.55 now. So again, let's see how that market reacts to that level. Might be a little cheeky buy at 1967.80 perhaps. We have to always second guess the market. Although I've got good levels and know where the market can go, when we've got the this volatility and this fundamental sentiment driving the market, you have to always expect that everybody knows that good news should send the S&P up, so they can send it down in the short term, getting the retail traders out to their 1% risk, then buying that 1%, 2% risk back, and then making the market do exactly what we all think. So realistically, we should see a new high probably made in the S&P. Gold should continue to drift lower as that safety element is taken out of the market, but means that the US economy is strong again. But the top experts in the world believe that the US can go it, without quantitative easing now. So it has to be essentially positive news, good data. So just a few more ticks down in gold. So let's just see what it does at this 12.1665 level. I've got a feeling I don't want to buy it, you see. It's getting too aggressive. So I'd like to see it jump down now. Again, to see that big selling movement as gold can do, and then pile in and try and get all the all the dip buyers out, and then come down to this lower 209 spot 60 level. I mean, gold when it gets going is very, very aggressive. So it's going to tell us soon enough if this is, again, a break or bounce trade. We're tracing a little bit of these lows in the S&P, so some good levels that are called down there. Again, I think the euro dollar for me is the one. This 126.426 level could be a quick scalping opportunity to get in. So again, I mean, it's no surprise that the market holds on the levels you put out. This was just drawn in based upon this previous movement. So instead of doing a Fibonacci from the high to the low, do it from low to the high, so to get the extension points and the pivot. So the pivot's 50%, right where the top of the candle is, and then the first extension point, 161.8, is where the market tested. I mean, these things are not difficult, but you have to be in tune with your technical indicators because the market will move 80% of the time technically, even though it's trading off fundamental information. So again, you have to think quick, act quick, move quick. The markets don't give you any second chances. That's 77 ticks in gold. You could have made if you sold it. You know what it's going to go to. So look for this low level in the euro dollar. Again, this is where I'm going to buy more than anything. I think gold's going to continue to move down on the back of that data, to be honest. S&P's really kind of midpoint, back to that 100% retracement. So again, watch this euro dollar, these low points. So just a little bit further in the euro dollar. Again, I won't be too bothered if it didn't. Again, what we're looking for is a quick jump down, buy, consolidation, and then get back. I mean, that's a big candle for the euro dollar. Much bigger reaction than than gold and the S&P. But that's again why I focused on these markets, because one of them's going to tip its hat and tell you what's the best thing to trade. So it's a good level down here. But again, as I said, you could quickly see it come down to this lower level. So you might have to do a bit of averaging in. And that's why I always trade, these things of small size. So I'm happy to average another 20 ticks, knowing that the market, this is a good level to buy. But maybe it breaks down to here. We have to buy 20 ticks lower. The market then consolidates and then comes back into the range. Okay? So again, gold's looking weak again, which again on this dovish kind of tone to to the quantitative easing end could again continue to push gold to make new lows. And again, once we close and hold below 1,200, it's $1,100, $1,000. These are big round numbers and targets that people can push by the end of the year. So anyone trade that, guys? Anybody done anything just yet? Again, we're still going to be a bit confident, a bit hesitant. Yes, it's the euro dollar I'm looking for. So 2015 is the first time we're going to see a rate hike. That's what the analysts now are predicting. After the quantitative easing's end, it's just come over the wires. So watch this level now. I'm going to buy some in the euro here if we hit that level. It's 2015, they've kind of priced interest rates for movement. Okay, so I'm going to buy that low level when it hits it. Again, I know I'm going to buy it now, so I potentially know I'm going to have to average in at that low point. But that could be, that should be a nice, good technical low. So I know that I have to, look for these next 20 ticks, but I'll be happy to buy some more down here to average in and build a position to try and get back in the range. So pretty much the market's saying that the first rate hike is going to be 2015 in the US, third quarter in September. So again, a bit more forward guidance now, a bit more understanding of what the US, what the longer term traders are trying to achieve. So we're still towards the lows in the euro dollar, but that's a big old candle. Okay, so that's a big candle. Again, we've come down pretty much 123, 24 ticks in a straight line. So, again, it's my Fibonacci level on that hourly retracement that I know is a good point. I know that, again, because it's such a big candle, it could quite easily, go down another 20 ticks. But I still think that's a nice little short-term kind of bouncing opportunity. I'd like to see it hit and bounce quicker, but we have seen, again, we're trading off this, this fundamental data, holding towards the low in gold. And again, really just ranging around in the S&P. Nothing really kind of major to kind of write home about. So euro dollar from here, what would we do? Well, this is what we'd look for. We'd look for the market to try and retrace back to 50% of this down move. Okay, so that's going to be this level here. So the trade is really averaging around this low point here and waiting for the market to kind of go back. So risk reward wise, 17 ticks to make 43 ticks. So around about a 3-to-1 risk reward ratio. So what we're going to have to do is really hope and try and understand that this is such a good level down here. The market will hold, hesitate, maybe a quick opportunity to kind of bounce off these fib levels. But realistically, you're looking for your exit point to be 1, 2, 6, 8, 3, 1. So again, we've picked a low, we've got in, we know we might have to average down to here, but our target points are here, here, and here. Again, we can understand the markets move so fast in one direction. What, again, goes in one direction will have to go to another. Then maybe, now we put these levels in, we'll just go to the 15-minute charts, because the 15-minute charts now will give us a better idea than the hourly, because obviously, we're going to have to wait for the market to pan out. So gold again, we've got our ranges. We're understanding that gold again has really kind of broken and hold. It's in quite a bearish formation anyway on the hourlies that we see below the hourly fib. So really 1,209.60 if you are short and staying short. And the S&P again, it's taking this news to push all the longs out. It's getting down to these lower levels. So again, 196780 could be a good buy, but you might have to just again go to that next lower level down, okay? Because when we were in these kind of breaking patterns, the market knows where the market should stop. So 21 ticks in the S&P down to here. I don't know if it's got enough strength to go another 100 ticks down. So I'd wait for a quick break of this level, then the market to come back and trade it the second time around. So let it break this level, yeah? Then wait, pause, let it hold, and then buy that level. So I wouldn't be buying a break of this level because we're looking too negative in the S&P right now. So we're holding towards the lows in the euro. That's fine. Again, we know our kind of average point, and again, we'd have to kind of figure out monetary-wise, I would say, rather than a stop level, because I won't want to hold it down to 125.006. But I'm just looking for a natural scalp, looking for a natural bit of profit taking on the back of these basically 1, 2, 3, 4, 5, hourly closes. So we're just looking for a profit take, up here or here. We're not looking for the world's best trade. We're looking just to pick a good bottom. Okay. We all love to pick a good bottom, don't we? So going green now. So we're looking for that quick momentum to get back. And, really, we can get out at any of these points here, the 23.6, 38.2. Again, it's not like we're trying to make, the world's best trade here. We're in at the lows. So we can make 17 ticks, 30 ticks, 42 ticks. Again, it all depends, what you think. I mean, the longer it doesn't get back into the range, the more likely it is to make fresh lows. That is the problem. And again, that's the problem with trading fundamental data. When you see big moves like this, okay, the quicker that the profit isn't taken, the more likely it is to get to low levels. But I know the low level is going to be around about 126, 240. So again, we might have to average down here and take a slightly longer term trade. That's just trading, I'm afraid. It's not guaranteed money, is it? So what else have we got? John's just saying bought some dollar yen up 52 pips. Good to hear it. Again, has anybody got involved in gold, the euro dollar, or the S&P at all? Has anybody got any thoughts? Again, gold's really getting back to that 1 to 16.65 level. So that really is a good, strong kind of intraday trading level. So again, a close below that. Let's just put the 15-minute chart so we can see how the market's behaving a bit more intraday. So same kind of pattern. Again, markets are consolidating towards the lows. Again, just holding towards the lows in the euro dollar. Again, we're just looking for that quick bit of movement to come in. And again, we've got all this candle to aim for. I'm not saying we'll retrace 100% of it by any stretch of the imaginations, but 80% of the time, a strong directional move will retrace to 50%. Okay, so that's what we're looking for, that 50%, or to take a quick movement on this 23 or 38.2, just take some money out of the markets. I mean, we're small on side. Again, we're not going to change the world with this trade, but again, that's just real time analysing, markets in a fundamental manner, due to fundamental news. So this is real trading. This is how real traders look at the market. I'm trying to trade, to interpret, to show you the technicals, the fundamentals in real time. It's really hard. Not many people do this kind of stuff. So again, I can only go off, just kind of previous ways of looking at this. I mean, it looks pretty negative across the board, to be honest. So I think just a natural bit of profit taking is happening in the indices. So not a real big surprise that quantitative easing stopping, sends the markets down, even though it's perceived to be good news. But what it does mean is that the free money element is gone. That the free money of no matter how low the markets go and the Fed step in for quantitative easing, means that that safety net is taken out of the markets. But again, you can't deny that as a purely economic and fundamental piece of information, it's good news. Okay, it's good news. Yeah, if the US can sustain, that means the US is in good shape. It means that it should filter through to the wider global economy, and things should start to normalise. So we're struggling in the euro dollar here. We just want to see a little bit, of a high tick. Again, we just don't need much, to be honest, before that is quickly going to get to these fib levels. Gold seems to have hit the low and it's kind of consolidating. Every time we hit these lows, as I said on the dailies in the indices, we're bouncing back. So no surprise, these low levels that I told you, 1967.80 is the bottom of the move. So you would have bought a cheeky low point in the S&P. Then again, we're 58 ticks on side. These are big candles, guys. These are big moves to pick these tops and bottoms. So, looking at euro dollar, any chance it'll come down to 126 flat in your opinion, given the overall longer term trend? Yes, absolutely. I think it definitely will go down. But again, the trade I'm trying to do is just a short term trade. So I'm just trying to get this low point and just to get back into some of this big down move and just a profit take. So I might take it at 23.6, 38.2. I mean, I'm on side. It's only kind of 8 pips or so, but it's a good, solid technical trade. But sometimes you have to be patient with these things. Again, when you get out because you think it's not going to go, then all of a sudden the market buys back up, and in no time you're trading back up here. So S&P really is the one that's kind of traded very, very nicely technically. So we'd like to see a close above this 100% at 1976.50. And again, I wouldn't be surprised if we, take away quite a lot of the gains today and don't close a little bit higher. Because essentially, it's good news for the US. And although it is good news, again, you have to understand the retail kind of side of it are buying up here, whereas the institutional like to buy down here and again push it back up because they're looking for the longer term, aren't they? They're looking for, right, okay, well, it doesn't matter, where we close today. I've been buying down here and here, so I'm still net long. Again, it's pretty much an inevitability we're going to make new highs in the S&P. I mean, we had every chance to carry on and smash down into these lower ranges. Perfect, kind of double bottom scenario and hold above 1849.10. So we're going to have to get above 2000. It's simple. Do your Fibonacci. All you have to do on a blank chart. You don't have to use anything else complicated. Low to the high. 50%. Market holds above the 50%, then it has to go and make new highs. Yeah? Might be tomorrow, might be next week, might be next month. But as long as it holds above 1921.08, S&P has to go up to make a new high. That's how it works. So we're just going red again in that euro dollar. So again, looking at we might have to buy lower here, expected to go back up. Again, dangerous. Again, it's very difficult if you try and turn a scalp into a longer term trade. But again, we're trying to pick a reasonable bottom based upon the short term technicals. So gold holding towards the lows, and again, S&P just really kind of mid range. So interesting, guys. Interesting. I mean, what's anybody else's opinion of what the Fed have done? Does anybody think this is, brand new to the market? Does anybody think that, this is going to change anything? If it's going to change the longer term kind of outlook of the markets? I mean, what are your thoughts, guys? We've got a lot of people in the room today, so 76 people. What do we think? Quantitative easing come to an end? Is it ever coming back? Is normalisation going to be here by 2016? They're going to be at 3% interest rates. I mean, again, average interest rates 2.5. We know they're going to go up in the UK first. I reckon probably, I'm saying first quarter, but, essentially maybe after the election now, second quarter. Okay, just another question. What do I think about the dollar yen? Well, the dollar yen, I mean, trade is very, very technical in these things, because of the pegging system. So, where did that dollar yen go? So, dollar yen, are we trading very technically, because it always does. So let's just put the chart on. So yeah, we've seen a big spike. So we've seen, again, a big move of action into that dollar, pushing out the Japanese yen. We know the Japanese economy has been slightly sluggish. So really, 109.453 is our target. Again, what I'd look for is maybe a 15-minute style Fibonacci. Well, it's difficult now because it's made a new high. Yeah, I mean, that's your target then, okay? That's where we're going to look to get higher. I would say 109.453 could be potentially, the kind of extension point here. I would say Fibonacci-wise, just do your fib here. And I would say as long as we stay above 108.502, then that's really going to, you'll look for them highs to be hit. So that's my kind of initial analysis, I would guess, of the euro dollar. So take a screen print of that just now, Sergio, and that's what I'll be looking for. To continue to hold above 108, and again, if we do get higher, then this 109.453 level is where we're going to get to. So that'll be the levels here. Okay, guys. Wasn't there a hint that QE might come back at some stage? Well, there was a hint, but the market's now confirmed, hasn't it? The market's confirmed that it's not. So, yeah, I mean, the whole thing about this data is it's confirmed, isn't it? It's confirmed that QE has ended. So it's all good. So just kind of holding towards the lows in this euro dollar here. Hasn't really done anything. So, again, we're still prepared to buy more back at, 126.40. And, again, if it goes below that, then maybe, again, we're just going to see, a sustained sell-off. I mean, again, I'm negative the euro, so I was only looking for really a quick technical trade to get back into this profit area. Didn't really want to turn it into a position trade. But, these things happen. It's not the end of the world. I'm only trading minimal size because, again, minimum size allows you to do something. The S&P, again, why do we not stick to the indices? These low points. What I just said to you in the initial, this is what is annoying, even for a professional trader. All I said, at the beginning of this presentation was buy the hourly dips in the indices. They're going to go higher. But, you get dragged in to look at the currencies. And again, it just one of these things, isn't it? But the low points of dip buying is a continual thing that we've seen happen in the dailies on the indices, and the S&P again gave us very, very good opportunities to buy low. But doesn't matter, does it? These things happen in trading. Yeah, well, good point, Alan. Yeah, I mean, again, buying the lows, it was there for everyone to see, wasn't it? But I mean, again, it's looking for the visuals as well. I mean, the 423.6 is a big, retracement. So in one 15-minute candle, we've taken out, 3-4 levels. So that naturally means that it has to come back at some point. Okay, so trading's not about being right though, it's about being right at the right time. So realistically, I'm looking for that quicker move for it to get back to these levels. But again, we're testing lower. We haven't made new lows yet. So we've got to keep the faith. Understand that we're going off the movement. We're going off the technicals. We've kind of hit a hard bottom in gold. We're heading back to this 126.65 level. It's a nice pivot that I called out, and it's just a matter of time, isn't it, before the S&P goes green and hits this 50% level at 1981.50, and then goes to new highs. I'd be amazed if it didn't hit 2,000. To be honest, don't hit 2,000, but probably the close of play today, or maybe by some point tomorrow. Okay, so Chris is saying, cheers for this, Steve. Waiting for the confirmation, took 48 pips. Happy and off for a beer. Well, do you know what? That's what it's all about, isn't it? That's all good stuff. That's what we like to hear. That's some good trading there. Chris, again, gold could be... I'd be much happier selling gold. I don't think gold's got enough strength in this candle. But again, that's the 50-minute candle. It's got 2 minutes till that closes. Again, the more we hold towards the bottom of the range, it's a tiny 15-minute candle. So nobody, institutional or government, central bank or anything has come back in. We've only traded 14 ticks after moving, nearly 90 ticks. So the odds are against that we're going to, climb back, after this close. It's likely we're going to make a new low before making a high. But again, it's one of these things. We've got our average pointing down here because we know that what goes down very aggressively has to come back. There has to be some profit taking at some point in this intraday move, because otherwise trading wouldn't work, wouldn't it? It wouldn't exist. So gold holding, again, I'd be very surprised if this hourly candle doesn't close now, doesn't close green. Again, we're on the H1, so we'll go back to 15, and we just see that pretty much, this 261 spot 8 retracement level, has been a nice point of attraction. We've hit these lower points, that I said, and then again, green has got all these levels to aim back for on the way up. Good news, it's good news. Quantitative easing, being structured, trusting the economy, it's good. It's good. So it's going to filter through to the markets, isn't it, eventually? Is it necessarily bad news for the euro? I don't think it's massively bad news for the Euros. The Euro's in a downtrend anyway. The Euro's in a downtrend because Mario Draghi doesn't know what he's doing. He's the only one, putting quantitative easing back. The US have stopped. And then, Draghi's talking about putting it back in. He's got negative deposit rates. He's got all these different conflicting ideas than the UK and the US. So, of course, the euro is always going to come under pressure. Okay, good to see you, Sonny. Yes, good. I'm glad you agree. I mean, you're a very, very positive, the S&P and stocks in general. So, yes, I agree that the S&P can only take this as relatively, modestly good news. Okay, guys. Anything else? I mean, we're kind of coming towards the end of my time, unfortunately, now. So you're gonna have to watch out for me on Twitter at Steve Ruffley. For how this trade ends. Any questions? sruffley@tradermaker.com. You can always contact me directly, guys. I'm open. And the system we're using is iView charts. Is a question. So just Google iView charts. That's what I use to kind of do my technical framework. It's my technical framework. I invented it. So we know our low point in the euro is going to be 1.26240. Again, I'd be happy to buy and average a bit more. As I said, not ideal to turn a scalp into a position, but still, we're only half an hour after the data. It's not like I'm going to be holding this for the next 2 or 3 days. All right, guys. Well, again, the consensus seems to be that's good news out of the markets today. So gold is a big target of 1209.60 on the low side. High side for the S&P has got to be 2000. I don't know if it hit it today, but certainly holding above 1980.75 is going to be fairly bullish for the markets in general. Low point, I think, in the euro dollars going to be somewhere around here. You'd suspect. And again, like I said, it's one of these things, guys, isn't it? Now the kind of short-term money makers are out. Again, long selling here. This is all profit taking here. So 26 ticks. So gold now should continue to go down to that 1209.60 level because we've consolidated, continuing the trend. So it could be the same for the euro dollar. So we get much below this level, I'm just going to cut it out. As I said, I'm like 6 pips offside. It's not big size, guys. I'm not trying to prove anything. But again, move, consolidation, move. So move, consolidation, reversal. So we're looking for an uptrend. And gold, again, could easily get down to 1209.60. That is your low point. There might be a cheeky bounce as well. But again, the trend is down. Okay, good news, gold is down. Good news, S&P up. All right, guys. Well, I'll be doing I'll be doing the non-farm payroll. You'll have to Google Steve Ruffley and that because I know FX Street hold their own non-farm payroll. But yes, I do my own. But, it's all easy to find on the internet. Been an absolute pleasure. Thanks to Vicky. Thanks to the guys, the moderators at FX Street. A good attendance today. So again, if you do want to send me an email, sruffley@tradermaker.com or get me on Twitter at Steve Ruffley. Again, why you joined in this presentation would be good for me to know so I can help advertise better in the future. I've been making quite a big effort to get more numbers on FX Street and kind of trade live and get involved in the markets and make it a bit more fun and interesting. I've been with FX Street for 4 years now, so I'm always keen to make sure that I keep bringing new things to the table. All right, guys. Well, that's great. I mean, again, thanks to the moderators. Thanks for everyone that turned up today. Again, you've got the levels. Take a screen print now. 1209.60 looking for in gold. I'd say 1985.50 to push for a high in the S&P. And again, low point 126.40 is for me in the euro dollar. Taking profit at 126.831. All right, guys. Been a pleasure. Thanks for that. Speak to you all very soon.